Okay, I'm live. I am live. Let me just make sure I'm live. I'll go on and just make sure I'm live. Your channel. Yes, I am. I don't know why I need to change that. I'll change that. It'll look at just. Okay. I'll look at just the. There we go. And I'm not as pale today. I turned down the lights a little. Okay, I'm going to start the podcast recording right now. Good morning. It is Wednesday, September 7th. I am in a somber mood. My dog feeling a little bit better. I might have to pause the podcast like I did yesterday. You people on YouTube are getting a special look at that. Oh, I forgot to start Active Trader Pro. But dog, just so you know, the other dog seems to be a little bit sick this morning, so we might be dealing with something viral. But emergency room vets here, I think I went off on this last holiday. I think it was actually Memorial Day where my other dog got sick, and emergency vets were just few and far between. And essentially what happened yesterday, I called my regular vet and they said, hey, we can't see them until Thursday or Friday. Called a couple of other vets who said they weren't taking new patients. There's a vet shortage. I think a lot of people got animals and things happen, but essentially that's it. So if I have to stop the podcast, the people on YouTube, you guys get to listen to the whole time because I don't pause it. But if you're on the podcast, I try and pause it. But if I have to do that, I have to do that. Let's get started on what Bill Ackman said yesterday about the markets. And he said, hey, the markets will move when the market, it'll try and time the moment the Fed will move to halt the rate hikes in anticipation of the reduction of rates. You can't do that. You can't time the market. Again, I say it over and over again, you can't time it. You basically trade the trend. You miss the first 10% of the move, maybe. You shouldn't care. That 10% doesn't make a difference long term. We went over it yesterday. If you guys saw the charts on YouTube that I was posting, you'll see it. The first 10% move makes no difference long term. In the short term, it absolutely makes a difference. In the long term, it does not. So Ackman is saying, say for instance, and one of the other things that I want to talk about is today we're at 3.5% on the 10-year bond. Yesterday, things went down, and it was a pretty tumultuous kind of Dow chart. If I let's just look at the Dow. You can see it yesterday. It was up, down, up, down. You look at the NASDAQ, same kind of trend. You look at the S&P, and I'm showing this on my Active Trader Pro so you guys know. Same kind of movement. There's no difference in the movement. Now, UVIXI, let's look at UVIXI because there was a little bit of movement in the VIX. I think it went from 25 to 27, and it's at 27 right now. I've been telling you guys the VIX wants to be at 30. UVIXI is at 1074. I said yesterday, hey, under 10, I like this, under 10. Do I like it at 1074? Probably not. I'd probably hold off. You have to trade the trend. And when I look at UVIXI on the trend, let's look at the algorithm with UVIXI. I was doing some scans. We'll go to the algorithm and run. UVIXI, the trend right now, the short-term trend is up. Short-term trend is absolutely up. Since August 16th, at 896, you're at 1060. So you've gotten your 20%, close to your 20%, 30 cents away from 20%. I think, in fact, you could be at 20%. So you've gotten that. Now, you look at these candles, and they're just fluctuating up and down, up and down, up and down. There's some volume level support here. Let me make sure I have this pulled back to the right space. This is in February. Let's pull this back because this is going to be about where you're going to see it. You do have some volume level support here at about 1037. So you do have some volume level support in your VIXI right about there. You've covered this gap between 962 and 980. You've covered that. The MACD is up here. The RSI is at 58. I'm sorry, at 57. It's in no man's land. So I don't know where it's going. You trade the trend. Short-term trend is up. That blue line right here, that's the 50-day. It's kind of capitulating down. The long-term trend of UVIXI is down. Trade the trend. If you're doing a short-term trade, trade the trend. It's up. You can use it, but that MACD is up kind of high with the RSI a little bit high. Again, you look at the difference. Look at the MACD back here where it triggered you to buy. And the RSI down here. Doesn't always happen, but that's typically what I'm looking for when I'm looking at charts like this. So you choose your side. You have no clear direction. My preference is to be patient and wait for a sign that the market is done going down. You look at the S&P. Let's look at SPY. SPY is the one that everybody looks at. It's a downward trend. You're trending down. Now that MACD, like I said, that MACD is kind of the MACD line, the blue line, is kind of moving up towards that strike line, which is the yellow line. Your RSI is at 29. You are in an oversold market. Now, what happened with the market today? Futures were up. And then at 7:30, the Wall Street Journal posted a story that the Fed is going to be all in on these rate hikes. It is going to be long-term killing inflation. And the market, essentially what happened in August, I believe I talked about it, the market was hoping that the Fed would see inflation reduction, kind of pause rates, and that the economy would still kind of boost up into this good economy. Well, when Jerome Powell came out in Jackson Hole and gave that speech that we're all in, and Kashkari said, hey, the market doesn't understand. We're killing inflation. And the Wall Street Journal comes out and reminds the market, hey, they're going to kill inflation. Well, that's essentially what they're doing. They want the 10-year rate at 4%. That will be kind of the neutral for a while. The 10-year rate right now is at 3.5%. What you saw yesterday going down was the rates on bonds went up, which means that the high growth names, and I know I talked to a younger audience, and that younger audience is heavy in the NASDAQ growth names, the ARK names, things of that sort. The questions that you guys give me on these, some of these companies are kind of crazy, to be honest with you, for a boomer like me to even think about investing in. And I know I've got some other boomers out there because I've gotten some questions from you guys too. But for you guys that are younger, you guys can do that and it'll come back and blah, blah, blah. Just choose your side effectively. But that's what we're talking about. And until this, the SPY kind of bounces up here. And you can see, look at back in June, the MACD was about this point. The RSI was at 24. Right now you're at 29. Can you time this? Absolutely not. No, because you don't know what's going to happen. In fact, here's what happened overnight is that Putin said the EU cap on Russian gas is absolutely, when the EU and the United States and everybody got together and said, hey, we might want to cap internationally what people will pay for Russian gas. Well, what did Putin do? Putin shut down the Nord Stream gas pipeline. He said it in a speech yesterday. Well, if you guys want to cap that, I'm going to just not deliver energy to you. So he's declared an energy war on Europe. That's going to increase pain on Europe, which is make no doubt about it. Europe is going into a recession. That's going to happen if it isn't already happening. So, yeah. The recession fears, and by the way, the recession fears in this country, even though energy should have gone up yesterday, it's the Chinese lockdowns, reducing demand. It is the fear of recession. Those two things are keeping these energy prices down. And probably I should have sold Devon. I should have sold Oxy at 70. I'm holding on to those. In fact, let's look at Devon. I've got 3 energy names. Devon, you can see that button hook. That button hook was clear. I talked about this before. Now you're capitulating here. There is this gap that is between 72 and 74. So I know it's going back up. You've got your ex-dividend date here, which is the catalyst on September 9th. I'm sure it's going back up, and you're still in this trade. Doesn't mean that this trade you won't get out of this trade. The moving averages are moving. The 9 and the 21 are moving, and those are key in my algorithm. So they're moving a little bit towards each other. The 200-day is still positive. Again, trade the trend. You had this golden cross of the 50-day up on the 200-day. You're using the 200-day as kind of a moving average here that it's kind of trading in and out of. But I have no fear of Devon. I don't mind holding it. Again, at 7% dividend, the largest one on the S&P. Oxy, Warren Buffett's in this one. Do I care that it's, that you just got out with a 10% gain yesterday in the morning, September 6th? No. I mean, that 50-day, I'm perfectly fine holding this one. Now, I am holding it in a brokerage account, so I may get out with again, pigs get slaughtered. Don't be greedy. Somebody pinged me yesterday about SPXU, and should you get out? Well, SPXU is the short of the short levered ETF of the S&P, and this has been a incredible run from 13 on August 18th all the way up to 17 today, and there's still confirmation above that 9-day. So the short term still has confirmation. You can see this green candle right here on September 2nd. That pierced the 9-day. Again, I'm looking at a 4-hour chart for you guys without TrendSpider, but it's a 4-hour chart, and on September 2nd, you see a green candle pierce the 9-day moving average. That's the only time it's done that ever since August 26th. So you've still got confirmation on this one. You've got the 9-day crossing the 200-day here. You got the 200-day in positive territory. Right now, there is no catalyst that is going to move this this market back up. So SPXU, great trade. But like I said, you've got pretty good profits. Are you going back up to 20? You could. There are significant gaps up here between 21 and 2150 and 2170. So it's not significant gap, but you've got a good move in here, I think. I would get out with a little bit. Take your profits. That's a big move in such a short time. Even Apple had that big move from July to August, and probably should have taken some gains there. So Treasury yields went up, NASDAQ went down, recession fears, energy killed the energy demand. You've got to choose your side in this one. And I'm going to go down my notes now, so it might seem a little bit scattered, but Willie, my apologies. I just didn't write it in my notes. But ChargePoint, CHPT, he wanted me to look at this. Now, before I go into the chart, and I've got the chart pulled up on the screen, but before I go into the chart, I want to tell you guys about ChargePoint from an EV owner. ChargePoint, I think they have some high-speed chargers out there. And the difference is between a high-speed charger and a normal charger. A normal charger will charge your car. It's kind of like almost a house charger. It will charge my Tesla in probably 9-10 hours. It may take up to 24 hours, depending on the actual speed. But that's what ChargePoint is really known for, those slow-speed chargers. Therefore, when you go to Whole Foods, therefore, when you go to, Michael's, I think, the art store has some, but malls, essentially. And you see these free chargers, or they might be paid for. Here in Atlanta, Avalon is an upscale mall up in Alpharetta, and Avalon has some ChargePoint chargers. And Avalon has some parking fees where you park, and I think the first 2 hours are free or something like that. Their ChargePoint chargers, they charge you $1. And it's just $1, and you can sit there all day and you can charge, but they charge you $1. And I think it's $1 for the first 2-3 hours, something like that, and then it's $1 every hour after that. but you can sit there and charge. It's not a high-speed charge. I went to the Apple store, plugged in, paid $1, and I got my ChargePoint, app on my phone. It's a universal adapter, so it's not Tesla, it's not anything. It's a universal. You just have to have an adapter that will fit into your car. Now, ChargePoint makes their money by selling the hardware and then servicing the actual electric the actual purchase. So what a mall has to do is purchase the ChargePoint hardware. They basically share in the revenue. And so ChargePoint is one of these things. This was a SPAC, and I think this got more hype than anything. So I'm, as an electric car owner, a Tesla owner, I'm not super pumped about ChargePoint. They did lose 21 cents a share back in May. Just recently on August 30th, they announced that they lost 18 cents per share. So they are losing less money. But make no mistake about it, they are losing money. The algorithm has you out, though, Willie, yesterday, and it's out with a 12% loss. And that's just, it made you buy August 31st. It got you out September 6th. So it does have a loss. The MACD, you can clearly see it's floundering here. When I go to FinViz and I look at ChargePoint holdings, I see that it's 48% below its 52-week high, but it's 73% above its 52-week low. So it's not quite in the middle. It's closer to the top. The 52-week high is $28. So far this year, it's lost 22%. So it has underperformed the S&P. But, again, they're not making money. You can read the articles. It's attracting investor attention. And here's what you should know from Zacks. Why ChargePoint sales dropped on Friday from Motley Fool. 3 stocks navigating the waters of the auto equipment industry. Again, it's an auto equipment company. I, as a EV user, I think I told you this, Willie, I'm not a super fan, but that was one that Willie wanted me to look at. The other one Willie wanted me to look at is INDI. Let me see. It's a semiconductor, Indie Semiconductors, and it's a smaller semiconductor. And what's interesting about this one, and I looked at it, is that it's got this pretty tight trading range. Outside of kind of the falls that it had before, where it was down. It came down from about 14 down to about 6. And right now it's trading at about 8. You got a 20% move, just like almost everything that was growth oriented. But you are losing money. Now, what Willie says is that they've moved more positively, and that's true. They lost 9 cents per share in February 2022. They announced in May, and they lost 11 cents per share, so it's a little bit more. And they lost 11 cents per share here. The CEO's positive on it. I don't know that, again, in this market, Willie, I think you're in for more rate increases. I think you're in for more tightening and more hurt. So you see the PE on FinViz is 0. The target price is $14.17, but they've gotten $8.33 actual target sell price. It was just downgraded by B. Riley from $9 to $8, and you're right at $8. I just, when you see that target price here, analysts mean target price. That's what it is. It's on FinViz. And if you guys want to learn any of these fundamentals, they are right here. They are, right in front of you. You can kind of hover it over, look at it. If you don't know what something means, just go to Investopedia.com and look at it. You'll absolutely 100% find it. So I've got 4 people watching me right now. Cool beans. I didn't think any of you guys watched live, but Willie, Indy, you're in it. You've gotten a 10-cent gain. I don't know if you're going to get to the 80 cents to get your 10%, 82 cents, because I just see, you can see this kind of top portion here. Let's do an auto fib and see at this 822. This is what I was looking at, 851 right here. It's kind of broken through there and used that as kind of the resistance level, but you've only got 889 as your next kind of resistance. Then you've got 951, and then boom, you've got up here at 1111. So you've got a tight range here in the Fibonacci's. And sorry about the truck outside, but you've got a tight range in the Fibonacci's. I don't know that I technically like it. I think I'd rather, to be honest with you, the volatility of NVIDIA has attracted me because it's kind of found a floor here. The ex-dividend date is tomorrow. NVIDIA is one that I think they've got the technology. Look at the RSI at 24. It doesn't mean anything because you go back here and the RSI was at 22 back on April 27th and the stock was in the 200s. You're at the 130 right now and the RSI is about the same thing. But do I think there's going to be a pop? I think at some point there's going to be a pop here. Here's the thing. You look at NVIDIA. They're actually making money, but they are still expensive. Their PE is 44. The forward PE is 30. Look at AMD, which is the closest competitor as far as technology goes. The forward PE is 16. The PE is 33. So your forward PE is half of what NVIDIA is. And you do have the China where you can't trade per the U.S. because of national security reasons. So with that INDI, Willie, you might be 100% right, and that thing might go back up to 16. Take your chances, but in this market, I think I'd rather have something a little safer. Let's go down. Zip Trader Charlie last night went over Palantir. And I am a Palantir owner. In fact, you can see it over here on the right that I own Palantir because it's in my brokerage holdings list. And what I noticed about it when I was doing some of the scans is that it does, you are in. Now, mind you, this MACD, and I'll pull this up. See how it's floundering here? Because the algorithm is based on a MACD strategy, when it flounders, it gets you in and out. And you can clearly see that it got you in here August 31st and it got you out September 1st with a 4% loss. Now, because this trades, it's a $7 stock. It's down at $7.27 right now. What's interesting is September 2nd, it got you in at $7.67. You're down at $7.27 in the pre-market right now. The RSI is at 26, but that floundering MACD worries me. Now, Charlie said, hey, maybe it's a good buy here. And he's got a great video. Go over, look at Zip Trader and watch his latest video. I think it says buy this stock at 767 or something like that. He thinks it's a very good investment, not necessarily a trade. He said you can trade around it, but he thinks it's a good investment. He goes over kind of an analysis that all of the analysts and the current stock price is based on 30% year-over-year growth. And he goes over it's closer to 26 or 28, and that's the reason the stock has kind of been beaten down. The company has also revised down, and what has been the mainstay of the company's earnings, which is government revenue, has slowed. He also went over from a positive standpoint, 72% reduction in operating losses. So they're actually doing better and working with less money. So the balance sheet is shoring up. So you could see this one move up was his thing. Now, I will tell you the history of Zip Trader Charlie is he does a lot of these analysis and he basically paints them as positive. He's not a pump and dumper. He is not one of those guys. He actually does real analysis. He's not somebody that just pumps it up. He's got actual numbers. But Palantir has some structural issues. It's got a CEO that is a little bit wacky, a little bit harsh for some circles, but the technology is there and the technology is what people are paying for. I'm a believer in it. I don't have a huge stake in it. I think I've told you guys, I think it's about $5,000 at this point, but he did say it. If you're thinking about investing in Palantir or you're thinking about trading it, watch this video. I think it's only 8 minutes long. 8 minutes of your life for whatever money that you're going to put in there. Absolutely watch this video. So the 3%, then, biggest news of the day. And I left this out. The Apple event. The Apple event is today. You will get new iPhones. There was an analyst on this morning. I was listening. I read a lot about Apple. here's the take on Apple. There's nothing. We know what's going to happen. You're going to get 4 new iPhones. You're going to get a new Apple Watch. You're going to get an Extreme Sports Apple Watch. And you might have maybe AirPods Pro 2. You won't get the augmented reality headset. You won't get the car. You won't get the big things that Apple's been kind of working on behind the scenes. Now, Apple stock, you can see here clearly on the algorithm that the MACD is kind of wanting to cross up. The RSI is at 28. This is completely oversold. You're using the 200-day here as support level, which is at 153. And I think that's probably where you close today. The analyst was kind of pointing out, hey, around iPhone events and new product events, the Apple stock just doesn't perform well. And traditionally, if we go over here and we look at Apple seasonality, I'm going to pull up something for you guys on TrendSpider here. And this is a seasonality chart that TrendSpider provides. And here, we will go back all the way to 1981, a monthly, okay? Look at this monthly performance. So 1981, what's that? 42 years. 42 years this is. So it's a good indication of what the stock does. Look at what the stock does in September. So 33% of the time, the stock is up. Now, if you look at Apple stock and the chart, it's been a rocket ship since 1981. So there's no reason that every month shouldn't be up. But you've got 33%. The second worst month is June. The best month is October. So what does this tell me? This tells me that the seasonality, maybe a week or so after this event, if we get back down on Apple, down into the 140s after this event, load up your Brinks truck. Short-term trade, a swing trade. This won't be a day trade because this will not gain 10% in a day. This will gain 10% in a couple of weeks. It will gain, you can clearly see, it gained 20% over a couple of months from June to August. I think you're looking at a similar run. I think you're looking at this one come down here. And let's pull this back. If we pull this volume level back to recent highs, which is March, okay? March, it was trading in about the 180 range at this point. You can clearly see there is a 149 price shelf right here. And that's why I say if you get into the 140s, I think you load up the Brinks truck because I think what you're going to see is this come down here. Now, this is without catalysts. If Putin all of a sudden, throws Europe into an enormous recession, China keeps 60 to 80 million people locked down and locked in their houses, and growth in China is say Shenzhen, where the iPhone is manufactured, all of a sudden shuts down all of its factories. You're going to see Apple get hurt. So this is without catalysts, but this is what I see kind of going on. You see this. It's got no confirmation right now. You've got the MACD in free fall. You've got every kind of candlestick under the 9-day. There is no short-term or long-term positive trend in this stock. But I think if you get down near this 147, 145 area, I think you see some support there. And the next earnings is October 27th. I think with the Apple announcement, I think they hype it up. I think you run into that announcement probably back to the 180s. Just a take. And again, that's putting into some macro kind of positive comments from Tom Lee, who thinks that the S&P is still going to be closed at 4,800 at the end of the year. And that's putting into Apple. Apple will need to be at 180 for the 180 or higher for the S&P to be at 4,800. So that's kind of putting it in there. The real question here, and I think the stock pops today, if Apple announces pricing. And what I mean by that is if they just up it a standard $100 but don't reduce the 13 cost, and I've got an Apple 13 Pro, I am perfectly happy. I will probably not upgrade. I just bought this like a month ago. So I will probably not upgrade. And I'm an Apple fanboy, so usually I get the latest and greatest, but I'm not. I wait for iPhones. I wait for a while, and even with their products, I mean, shit, I'm working on a 2017, I think, iMac. That's what I'm streaming on. I've got the iPhone 13 Pro. I do have the Apple Watch 7, whichever one is the most recent. I've got the new AirPods. I don't like them. I'd rather have the Pros, to be perfectly honest with you. They're just too big. And I have a 2015 MacBook Pro. That still works, but I probably should upgrade. I will, for financial reasons, I probably will upgrade in the new year. But that's the Apple thing. And if you think that Apple is going to get back down to the 130s, don't buy it. I just don't see support level for that. If the S&P wants to get back down to the June lows, that's where it's going to go. But I do think that you're going to see this 147 to 149 provide some support here for Apple, because again, look at that RSI at 28, and that MACD is kind of turning around. But don't buy it today. There is no reason to buy this today. So let's go into scans. It's been about a half hour, and I'm probably going to do a shorter podcast today. But some of the scans, one that I love trading, and if you guys saw yesterday, and I didn't look up why, but Solar Edge, SEDG, is one that I've traded. I brought it up in the past. You had a MACD cross up yesterday at 278. This one, the algorithm makes you 16% versus a buy and hold gets you 42%. There are 31 positions within those 1,000 candles. 11 are wins. The average win is 14%. I can see this gap here between 309 and 315. You need about 30 points from 280 to get to 10%. You've also got this gap up here that hasn't been filled between 334 and 363. This is one that trades on hype. It is a huge, you can see the volatility in this. It's enormous. Those candles, these are 4-hour candles, folks. And the change period, let's look at yesterday morning. Yesterday morning, the period change just in 4 hours was 2.96. If we go back here, August 3rd, the day after earnings, your period change was 9.72% within 4 hours. You go over here. Let's look at this candle. This candle looks a little, it's maybe not that big. Here, July 13th, you've got a 6% move within the candle space, and that's within a 4-hour candle. If you don't know what candle means, Google OLHC, I think it is, candlesticks, and that's what I use. So it's called open, low, high, close. You can kind of see those things, but Google it. Go to Investopedia.com. But this one came up 278.52. If you want to see more about it, go to FinViz and type in SEDG. But we did get a cross up. Second one that came up is, and I talked about this one, I think earlier last week or sometime, we had a MACD cross up. Yeah, it was just last week. And I said, hey, I don't necessarily like this one. And it's Upstart. They are a loan company. It is a one that is not making money. Their AI was huge in over the pandemic, and this one traded way up and just has come way down. You had another MACD cross up. The only reason I bring this up is to show you, hey, in this market, you can't trade the trend because the trend is getting you out with losses. So you've got to trade the trend. And do I think that this is probably, I'd rather trade Sedge, to be honest, than Upstart. But I figured I'd bring it up since I have brought it up before. NOW, which is ServiceNow, had a cross up at 430.53. I have some developer friends who hate this product, who absolutely hate this product. The RSI is at 36. That MACD is low. I think you could do this. Here's the problem that I see. When you look at this, and this is a CRM competitor, look at that PE, 475. Now, let's go to CRM. CRM, Salesforce, They're only at 283. I say only 283. These are software platforms that have enormous growth, but they just have not performed. Look at this one for 1 year. I mean, it's been crazy. But they did have a cross up here. When you look at ServiceNow, year to date, it's down 33%. So it is doing better than Salesforce, and probably because Salesforce has that Slack issue. They purchased Slack. You can see Salesforce, August 12th, Guggenheim initiated covers what's in neutral at 510 is their price point. You're trading right now at 430. So 430 was the cross up. So the first, it's funny, the first article on FinViz with Now, which is ServiceNow, says the storm is coming for software stocks, analyst says. So be careful. The algorithm loses you 12% on ServiceNow versus buying and holding just loses you 6%. Your average win is 6%. Reason I bring this up is because you do have a good chance that there's 12 wins and 17 losses out of 29 positions. So that's another one. Another solar is Enphase. ENP as in Paul H. This one has been on quite a run. This one, the algorithm makes you 195%, 332% with just buying and holding. But you've seen, and look at, again, my algorithm is based on a MACD. And if you're looking at the TrendSpider chart on YouTube right now, you can see, look at that MACD, it's up there. But the stock didn't really perform like it was. It just had this huge run up. And again, MACD stands for Moving Average Compliance, something, I forget what it is. Hold on, here. A good Investopedia. There we go. Investopedia. Let's go here. We'll look up this, and we're going to type in MACD. Moving Average Convergence Divergence. Simple as that. So if you don't know what something means, just go there and look at it. But Enphase, they announced $1.07 earnings back in July 26th. April, they had 79 cents. So you can see those earnings. That's why you're seeing this gap. Now there's a gap down below here at 257 to 262. But the volume shelf there is kind of holding up. That's what this does. See how it's capitulating up here between probably about 270 and 300, 310. It's capitulating. So it's creating that volume shelf right here. If you go down to fill this gap, look out below, because below you're looking at a $214 price shelf, unless this seems to come back, which I think it would probably move down significantly. But I wanted to bring this up because, again, it's solar. It is a great, great company. Earlier, I think it was a few weeks ago, there was a listener who brought up Meli, MELI. This came up on, I think it was the ARC Holdings, but it's crossed up. And I know I went over it before that, hey, it was up here and I wouldn't buy into it. It did cross down on kind of the gap down based on just earnings. It gapped up and then it had to come down. So it's back to where it was trading prior to earnings. Earnings were really, really good. There's a clear volume shelf here at 817. So there's definitely some debate as to whether this one's going to pop back up or whether we're looking back at the July kind of lows on this one in the 600s. It might go back there. Again, trading the trend, the 200 days moving down, the 9 days moving down, the 21 is moving down. The only one that's still moving up is the 50. And that's medium term. So I don't know that I'd run into this one, but I wanted to bring it up because it did cross and it was brought up by a listener. So Roblox, RBLX. This is a metaverse company. And if you talk to creators, this is the only place to make money in the metaverse because they have so many users. We brought this one up. I think I brought it up in July because it went from 29 all the way up here to 51. Even with the algorithm, with that button hook that I talk about and the algorithm getting you out late, you still had a 51% gain from June 21st to August 18th. And now this the RSI is just floundering down here. And it crossed back up at 37.90. Now, the last time it crossed in this direction, I should say in this area, was way back in March. And that was $40, and you got to enjoy a 14% gain. Again, the trend. Trading that trend is going to be tough because the trend has been 9-day down, 21-day down, 50-day down. 200-day is still moving down, even though it's not as steep. So my guess is that this 50-day is trying to come back down to this 200-day. I don't know that I'd take this trade, but if you have a kid, if you personally use Roblox, I don't think you're hurt by holding on to this for long term. So buying this at 37, if it goes down to 29, yeah, you've lost 20%, 30%. But would I be upset holding this one? Probably not. Again, I don't think it's a bad thing. So Roblox is one. DLTR. This is Dollar Tree. And if you guys have heard anything about some of these discount stores with recession, Dollar Tree and Dollar Store are two that here, I'll pull this up. Let's look at the weekly of Dollar Tree. Look at that pandemic move, okay? This is March of 2020, where you had the COVID start. You had this move all the way up, and then late in 2021, you had this move down. But boy, when recession fear started, look at that move. Now you're back down at 139. And part of the reason, and I want you to DLTR, put it into FinViz. And DLTR, you've got a forward PE of 20. Now there have been no recent analyst price movements, changes. They're all from March, and they're all upgrades. And the problem is, yesterday, the reason why it gapped down is toxic chemicals and lead found in children's products. So Dollar Tree could be in trouble here. But if we run the algorithm again, what I like it down here, you've got this news. It's horrible, horrible news. Any reaction by the market is an overreaction. And look at that move since September 2nd. Kind of gap down here after earnings. You can see 237 earnings, $1.60 earnings. That's going to gap down. Look at that volume on that day. People were taking profits. Now, if we move this to the recent highs, let's just move it over here so that we can see. Look at that volume shelf created right there. It's creating its own support. That's why I kind of like it here. Now, you've got to get through a lot to buy this one because it's run up. Dollar Tree, let's look at Dollar Store. Remember, the PE on Dollar Tree is 20. Let's look at Dollar Store. Dollar General. Dollar General is DG. PE is 23. They're kind of the same, not 100% the same. You can see BMO Capital Markets outperform to market perform. Their price target is 265. The Dollar General is trading at 239. That's the most, recent upgrade of those two, or downgrade. But it was an interesting one. Next cross up we have, and again, that's Dollar Tree DLTR at 138. Next one that we have a cross up on is an energy name, NEEE. And that's the NEE, just two E's. Next Era Energy. The only reason I bring this up is because it was one of the few that I actually recognized in the energy scan. And you clearly got a RSI that's in no man's land to 56, but it did cross up at 87.40. Now, what scares me about this one is you have this gap at 80 to 83, but you've got a clear volume shelf here and support at 84. I would definitely use a stop loss on this one. The algorithm outperforms. It makes you 43% versus buying and holding only makes you 21%. Your average win is 6%. You have 11 wins and 12 losses. So what's interesting about this one, let's look at the seasonality. 42 years. Again, October, 80% gain. 80% of the time you make a win on a monthly basis on NEE. So, giving you some great names, giving you some great opportunities. I think they're out there. I'm going to stop the podcast. I got to go let the dog out. 45 minutes today. Bam. I think I'm getting a little bit more precise. If you guys have any questions, there are links below to support the podcast. I have a link tree down there with all of my links to YouTube, Instagram, Twitter, the support page. Thank you to all the supporters. I really, really appreciate it. And again, I had I had 3 people reach out to me last night that they signed up with TrendSpider. So I'm giving them access to my algorithm. I'll put that in the instant message to you guys who signed up so that you guys can have access to it and you can see all these great charts. If you have any questions, hit me up. Thank you again to the supporters. Thank you to everyone that signs up. If you want a new phone service, I've even got a link to Visible phone service, by the way. I am so happy with Visible. I can't tell you, $25 a month. If you have any questions about how to get it for $25 a month, I think they advertise $40 a month. If you sign up with my link, you get $20 off your first month. And then I get $20 as well to pay for my phone service. So you guys are paying for my phone service. I certainly thank you for that one. But yeah, I've got some links there. I'll be putting more links on as to how to support the podcast. Most of all, I thank you guys for listening. I can't believe that people want to listen to me, but thank you guys for listening. Really appreciate it. Have a great day. I'll be back tomorrow. Take care. And by the way, be careful today. Markets were down. I think they're up right now. Let me see. They just opened. Yeah, they're up. Be careful. I think you're seeing a lot of volatility today. Just like we have in the past. Your VIX is down at 26. Apple's up. Everything seems to be up. Google's up. GOOGL is at 107. Amazon's at 126. Again, these are got Amazon Microsoft at 255. Tesla's up slightly, almost 1% at 277. That's kind of where I was expected to be. So, again, think about your long-term trades. Are you upset that you bought some of these? Ooh, what's S Pro? Let me see what S Pro is. It's a pharma company. Yeah. S Pro is up, and they're getting delisted. Issue failed to meet the NASDAQ continued listing requirements. I'm just looking at the most active. KOLD is up here. Boyle, probably down. KOLD's up 2%. Apple, up a little bit. Yeah. Enjoy, guys. Take care. Have any questions, hit me up. Again, thanks. Oh, I'm still on YouTube. I forgot I was still live. I got to give you guys the secret word because every day I give you guys a secret word. Today's secret word, VIX. You know what? No, not VIX. Yeah, let's go VIX. VIX. And if you guys don't know what the VIX is, look it up on Investopedia.com. That's the secret word today. I'm going to stop the streaming. Thank you guys for watching. Hopefully you guys got something out of this. I'm going to go shower. If you guys can't tell, I don't shower before this, but I'm going to go shower, maybe trade some later. But I'm staying real basic, not trading a bunch because volatility just kills me. So take care.